The catalysts for the currency market today are the following: the minutes of the May meeting of the Reserve Bank of Australia, the fall of the offshore yuan to 3-month lows, the sharp difference in the interest rates between the United States and Japan, and of course, numerous comments from our financial policymakers. After a non-working day in Europe as well as a completely empty economic calendar, the market opened the new week cautiously. Can the market sentiment of Monday spread onto Tuesday? After all, in terms of economic data, there is again nothing. However, 5 representatives of the Fed Reserve are scheduled to speak today. By and large, they are unlikely to be able to add anything new to what was already said last week. You are aware that the Fed policymakers adhere to cautious rhetoric even despite the long-awaited decline in the consumer prices in April after 3 months of unexpected increases in inflation at the beginning of the year. Atlanta Federal Reserve Bank President RAPHAEL BOSTIC again cleared up this issue yesterday. He said that he expected one cut in the funds rate this year, which would occur in the fourth quarter. Apparently, this is why Morgan Stanley analysts upgraded their forecast for the US stock market. For example, they predict growth of the S&P 500 index to 5,400 points by the second quarter of 2025. The previous forecast was made for the end of 2024 and only suggested 4,500 points. Deutsche Bank analysts came up even with a more ambitious forecast, anticipating the growth bar for the S&P 500 from 5,100 to 5,500 points, but the biggest optimists work at the Bank of Montreal. Their forecast is 5,600 points for the end of this year. Today, the S&P 500 index is meeting bullish expectations as it's trading higher in the intraday corridor of 5,302 to 5,325. The US dollar could not resist the hawkish comments of RAPHAEL BOSTIC on Tuesday, and it has already tested the area between 104.5 points. All in all, the American currency feels quite confident across the board. Moreover, the robust buying activity was observed in relation to the Australian and the New Zealand dollars, as well as the Japanese yen. The Kiwi and Aussie sank due to the firm US dollar and on the back of the weakness in the offshore yuan, which is falling amid the escalation capital outflow from the Chinese stock market. American assets, on the contrary, are being in favor with the investors. Therefore, it's possible for the US dollar to resume growth and climb over today's corridor of 104.40 to 104.70. Meanwhile, the Japanese yen is falling not only due to the more hawkish forecast for the Fed interest rates. Another headwind for the yen is the fact that Japan has accumulated a huge public debt, and it currently accounts for approximately 240% of Japan's GDP. On the other hand, the weak yen continues to attract carry traders. They buy cheap Japanese currency and invest it in a more gainful assets. So, traders are scared about profound weakness of the yen. Indeed, this increases the risk of a government intervention. Moreover, Japanese Finance Minister Shinichi Suzuki has already noted the negative impact of a weak currency on wage increases. That's why the dollar-yen pair today is consolidating within the intraday corridor of 156 to 156.5. Besides, the yen is even trying to resist the strong US greenback. While the yen is fighting off buyers with all its strengths, the euro also has decided to join it and challenge the US dollar. At the same time, the euro-dollar pair even ignored mainly dovish viewpoints of ECB policymakers. Today, Martins KAZAKS, the Bank of Latvia governor, said that the June meeting will most likely mark the beginning of rate cuts in the Eurozone. And the trade balance data was published today in the Eurozone, the report logged the largest surplus since December 2020, which came out at 24.1 billion euros. At the same time, imports shrank by 12% and exports contracted by only 9.2%. Today, the currency market will hardly repeat yesterday's sluggish trading. The main euro-dollar pair came out of the sleeping mode it was trading on early Tuesday. The instrument moved upward quite quickly. The euro still continues to trade within the range of 1.0840 to 1.0900, but already under the influence of a bullish impulse. Yesterday's consolidation could work as the accumulation of trading forces. This promises to have a positive impact on the future volatility of the euro-dollar pair. On the oil chart, volatility, on the contrary, is ebbing away after yesterday's news about the death of Iran's president. Contrary to expectations, no loud statements were made in the Islamic Republic, except for calling early presidential elections. This calmed down the market, and crude oil is trading lower within the range of $82 to $84 a barrel. At the same time, the Brent price quickly approached $83 per barrel and today broke through this support level. If the situation does not change, then the Brent price will drop to $82 a barrel in the near future. You have watched the market review by InstaForex analyst for Tuesday, May 21. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments down below. See you online tomorrow.